The dream of buying a house for many Americans is becoming harder to achieve as home prices continue to climb. Existing home sales in July falling more than expected at the slowest pace since January amid low inventory as homeowners are opting to hold on to those lower mortgage rates. 30-year fixed rates dipped slightly this week, but still remain above 7%. And my next guest is warning we'll see rates surge above 8% if the Fed continues to raise rates later this month. Joining me now is National Association of Realtors Chief Economist Lawrence Yun. And Lawrence, why do you predict 8% on the 30-year?
Well, the Fed is clearly overdoing it. The inflation has already come down, but the leaning by the Fed is for further rate hikes. We are reaching a critical resistance point where if the mortgage rate breaks a little above, it's going to easily top 8%, at least in the short term. So the best thing is that right now, the first-time buyers are struggling to get into the market. Combination of higher home prices, limited inventory, and higher mortgage rates. But if the rates begin to come down, the housing market will begin to revive because it's really making it difficult from the Fed decisions.
When do you think that mortgage rates will start to come down? And that's part one of my question. Part two, what about prices? Because we have seen some price pressure underneath these 7% mortgage rates. I would think that at 8%, you're going to see prices fall more.
Well, there will be certainly fewer buyers, but I think we will also have fewer sellers in the marketplace. The situation is we have limited inventory, and that is holding up the prices. The only area where they witnessed some degree of measurable price decline was out in the West, but when it happened, it brought buyers back, and now the prices are beginning to rise out in the West region. Now, the question about when the mortgage rate would decline, I would say that Fed will see that inflation has clearly come down by December of this year. Economy a little bit on a shaky ground, so I think the Fed will be cutting interest rate. That would be a huge signal to the mortgage market. I see mortgage rate hitting around 6% by spring of next year.
One of the things that we've seen is that those that have lower interest rates, 3%, 3.5%, 4%, they don't want to let those rates go. They're not motivated to sell. Many of those people are the older generations that would like to sell, but they just can't get rid of that mortgage rate because that means they're going to go from 3.5% to 8%. So the market is stuck, really. It's been like that all year. When does that change, Lawrence?
First, we have to recognize there is increased cash sales right now because people who don't have to use mortgage, they said, oh, I can use cash. And furthermore, people who are moving from expensive areas to more affordable regions of the country, say moving from New York City region, and then they go to South Carolina. Well, they sell that expensive home and buy all cash. So we see this happening. But we have to recognize there is a life-changing circumstances for many families. Additional child in the family, maybe a marriage, maybe a divorce, maybe a new job at different part of the town. So all this delay selling is just pent up right now. So once the interest rate begins to go down, say towards 6%, we're going to have a very unique situation of increased buyers and increased sellers. All these sellers who have been postponing their moves, I think they will say 6%, not too bad, I need to make a move.
And Lawrence, that's what makes a market. So looking forward to that in particular. And it'll be nice to see rates finally go down. But according to you, they're going to go up for a little bit, unfortunately. My thanks to Lawrence Yun. Lawrence, thank you. It's great to see you.